All right. Okay. So what I wanted to do this morning was something a little bit different because I get a lot of questions when I'm doing the one-on-one coaching or emails, not as many messages in the Discord, which is fine, but a lot around charting. So the one thing I'm going to tell you is that charting is purely subjective. Okay. I know traders that will trade or chart like a retail trader that will make $12 million a year, year after year after year. Andrew Diaz is one of them. I sat on his webinar 2 weeks ago just to watch his charting strategy, and he will chart across candles, which is what you are seeing here, right? Where we have price levels that are going through the candles. Now, there is institutional that will tell you that you do not go through a candle with a price level, with a couple exceptions. So I use Bryce's supply and demand indicator, which is charting all of the institutional levels. And I'm going to show you how that works. Now, for those of you that have worked with Alberto, Iceman, he is
Oh,
using a combination of mostly institutional levels. Okay. And then there will be an occasional time where he will cut through a candle, and I'll let him explain that. But we are not going to go into his strategy. If you want to work with him one on one, you guys know, just reach out to him, right? And he's helped dozens and dozens and dozens of you with this. I'm here to give you a high level overview so that you can stop fumbling the ball and stop complicating things. Okay. Now, I'm going to show you how I chart. It's not right. It's not wrong. It's what Bill does, right? What I do is very similar to Alberto, yet when I look at my price levels and I look at his price levels, they vary a bit. My charting is probably much closer to Bryce's because that's who I learned from. Now, if you were to look at my levels and Gus's levels, they're totally different. Why? Because Gus is looking at order blocks within active trader. And I know what you're thinking to yourself. Well, what is the right answer? Like, just give me the answer. Well, there is no right answer. And this comes down to being able to not only chart, but also to be able to read price action. Okay. So now I'm going to talk about the definition of supply and demand. And this is going to be a little bit different than maybe what we've done in the master class, but it takes time to really get the technical aspect of this. So you have to think about the fact that supply and demand is created at every interval on a chart. So it's created on a monthly, a weekly, daily, 4 hour, 3 hour, so on and so forth. Okay. So here I have a chart of SPX, and I'm going to just use this as an example. And I'm always going to start on a daily chart and thinking about where am I going to chart. But before I do that, what I want to show you is how the software is identifying where these institutional levels are. So if I am on using Bryce's supply and demand indicator, okay, and I go into the setup and I just say, show me where there is 1 day demand, which is going to be the second highest to weekly. It's not often that we'll get a monthly demand, right? But you will be able to see that when we are going to watch where is create the zone for the 1 day chart, where does that actually reside? It's going to take a second, but it will show you that this is where the 1 day overall zone is sitting for the overall demand. Okay, so if I were to go ahead and chart this, and there's a rationale as to why does the level show where it is, why it uses a candle wick, why it uses a body high. That is part of a more in-depth candlestick course. Okay, but this is just not by happenstance. It is very specific in nature. So you will see that what it is doing is it's taking it from the body high, whereas where it opened all the way down to the candle wick low. So that is what's going to be considered 1 day demand. Now, if I go to a 4 hour chart and I look at it, it's going to still show up here. But if I want to understand, well, where is the 4 hour zone? what I can do is turn on the 4 hour zone, turn off the 1 day zone. Okay. And then what you're going to see is now it created a 4 hour zone from the candle open high to the 4 hour candle wick low. Now, if I go back and turn on, will show me both of them. This is why I get a thicker zone with overlapping criteria. So if we're to go over here to the right, you're going to see that it says I'm in 1 day demand. I'm also in 4 hour demand. Now, if we were to go to a 3 hour chart and we're going to do the exact same thing, okay, we will go ahead and we will say, well, is there even a 3 hour demand zone here? There might be, there might not be, just depending upon the candles. And you'll note for a 3 hour, it's actually all the way down here, and it's from a further prior point in time, which is from August 6th of 2025. So there is no recent 3 hour demand on the chart. Let's go to a 2 hour and see what it shows us. I'm going to go ahead and turn off 3 hour, and I'm going to leave 2 hour on. See if anything pops up. Nothing pops up. Okay. So now let's go and look at this on a 1 hour time frame. And we got to change the time frame to the 1 hour. Again, we have 1 hour that is going to be lower here. And this is being derived from a further point in time back to the left. So what we know is that at this price level where these candles are, it is heavy 1 day and heavy 4 hour demand. So when you're looking at the indicator and you're trying to think to yourself, well, what exactly is this telling me? Well, it's telling you based upon historical data, and it reads the number of candles, where are going to be the buyers and where are going to be the sellers. So when I am charting, for example, what I am most interested in is the daily, the 4 hour, and the 1 hour. Now, why don't I turn off all the other time frames? Well, I really want to be cognizant of what they are and where they are from an overall guidance perspective. Now, when I think about, okay, I'm going to want to come into a stock and I'm going to chart like 6 of them with you as to how Bill would do it. It's not right, it's not wrong, it's just how I trade. Okay. And again, we can compare me to 50 other traders, and 50 other traders are going to give you a different perspective. So, what you have to do is learn what strategy works for you in your mind based upon what the charts are telling you. Now, I will also tell you that when supply is broken, it should be removed, right? There was at one point in time in history, there was overall a demand box back here. Okay, then we'll go ahead and we will make that green so that you can see it. I can unequivocally tell you that there was a demand box here. I will also tell you that once these candles went through the box, just like a gap, it disappears. It's no longer here because everybody who was holding the market up here at this level got their orders filled. So they are now gone. So that's the whole premise, that when a line cuts through a candle, you need to, quote unquote, get rid of the line, right? I had a line here at this daily low, this green candle cut right through it. Now, was it to the upside or to the downside? What we do know is that it opened here and it went all the way up here. But this was a demand, it was not a supply. So I'm going to get rid of that candle. So if I was going to chart SPX for Monday morning's opening, what I would be looking at are going to be about 6 different things. First and foremost, where is the prior day low? Where is the prior day high? Now, I can tell you that when I am running with 2 candles that are so close together in price with 8 points, I am not going to want to try to go long once I get above 66.01, right? I mean, that would be foolish because they rejected the market here. So you have to think about the fact that we are playing within these boundaries back and forth all day long for this day, okay? Your best opportunity is going to be for somebody to go out of bounds, try to come back up, and then go back to the next pivot low or candle low of day. Okay. It's just, You got to think about this as guardrails. And you can trade within the guardrails, but that's where you just get whipsawed back and forth. Whereas you are better to trade in the out of bounds zone. So, being that this day's candle high is so close to the prior candle high, I'm not going to put a high there because I don't want to go in calls if we just get above today's candle high. Now, I will also note that I'm probably not too anxious to get in, seeing that again, your next candle high is here, and you can do this very simply. Your next candle high is here, right? Where do we have more runway to the upside is going to be above 66.51 all the way up to 67.05, right? There's a lot of runway in here. So now, if I'm going to trade just this candle come Monday, I'm going to look at it on a 4 hour basis. Now, I don't know where the market's going to open on Monday, but if we are holding now somewhere within this new boundary box, okay, right here, because this is where the market's consolidated for 4 hours over and over. Now we're just doing this little game. So what I needed to do is break out of this box to go higher or break below this box, retest to go lower, knowing that I'm potentially going to stop right here. But if I don't stop right here, then where do I think I'm going to? Again, high level, my next 4 hour zone. We don't stop there. Where do I think we're going to? My next 4 hour zone. So I try to keep everything on a daily in a 4 hour basis. Now, we can come down to a 1 hour and get even more granular, right? But do I really want to start adding more lines to my charts? Or would I rather just sit and be patient to say, once we break a daily or a 4 hour level, the continuation for us to get back on track is going to be very difficult to do. Now, when I go ahead and I flip on Bryce's supply and demand indicator, you will see exactly what is happening, right? We found the top of the zone here. Excuse me. We found the top of the zone here on a 4 hour chart. We found the bottom of the zone here on at the bottom of the chart. Now, what do we have in between where I said I would potentially go short if I got below this 4 hour candle? Right where demand was forming on a 2 hour time frame. So what this is telling you is if we fall below the price level of 65.50, there's nothing holding us up until technically we get all the way back down here with more buyers. Now, I also can see that they held the market here on the interim. So while you're not seeing that there's any demand here, you just can't think that I'm going to go from here all the way down here. You're probably going to get some resistance or some stopping points. And you can also see that with this candle right here, right? I mean, they held here, they held right in this zone. So this would be my take profit target. Now, if I want to leave a runner to go all the way the heck down here, I can do that. Now, why do I not want to necessarily buy calls if I get above the 4 hour? Well, look what's going to happen. If I get above the 4 hour, I'm going to hit my head right into this resistance. And if I get above this, I'm going to hit more resistance. And above this, more resistance. Now, while that's not a foolproof strategy to just not trade, you also have to be aware as to what is the rationale behind the market, why it might not go higher as quickly as you would like versus it might go lower a lot faster. Now, yesterday we saw the market just go explosive to the upside. And it wasn't because of supply and demand, but it was because of a news event. And a news event will override where are all the buyers and the sellers because it is just clearing out orders so damn fast that you can't keep up with the stop loss. And that's exactly what you saw yesterday. So I'll pause here on SPX, but you can see where everything aligns, right? I don't even need this on to chart this, but you could use this as a resource just to say, am I thinking about this correctly? Questions? And you can unmute your line if you want. So would I get rid of a level if it was just the wick that broke through it? Yeah, technically, because the overall supply has been broken and the overall demand has been broken. Okay. I mean, technically, they cleared out all of the sellers or they cleared out all of the buyers. Alberto, what would you add? Anything?
Yeah, I'm right with you. I think one of the biggest points that you always want to keep in mind is, to Bill's point, right? Twofold. Number one is really like what makes sense to you. You have to understand that, retail traders or, different kind of strategies is really what comes down to your risk tolerance. You know what I mean? The perfection of entering and exiting a trade really comes down to your ability to recognize what's happening. And these levels, right, is just structure that's allowing you to identify. And the more precise you are, the better. The second thing I would tell you is you don't want to simply just rely on any kind of indicator. You want to be able to recognize what's happening on your screen, as Bill has right now, and then learn to use the indicator like a calculator, right? Knowing how to do math with pencil and paper. And then you turn on the calculator and say, cool, that confirms with the move that I was looking for. And so you want to use it as a way to give you your confluence for your setups rather than just simply leaning on it. Because what's going to happen is, to Bill's point, you might have demand, excuse me, supply, and then things like yesterday happen. And you're like, well, I didn't take a trade because it showed all red, and you would have missed the entire move for that.
Yeah, so that's part of the reading the market, right? And reading price action. So SPX is now done for Monday morning. I don't need to do another thing. I don't need to look at it. If I want to trade SPX, I'm ready to go on Monday. So let's go ahead and next I'm going to do like six more with you and I'm going to do them fast because this doesn't take long. And if you're thinking about it and overthinking it and thinking, where are my lines? Where are my levels and everything else? Okay, supply and demand is off. So where I'm going to start is I'm going to be like, well, what the hell? Like everything blew through my lines. So this line's gone, this line is gone, this line is gone, this line is gone. This line actually now gets moved to right here. Okay. And if I want, I could start on a daily basis and you can make this line go away. Okay. So on a daily, same story as before, right? Where is the daily high and the daily low for SPY? This is yesterday's high. Well, the day before's high is right here. So I'm not going to want to use this level. I want to use this level. Then where do I think we have an opportunity to push up to? And if you think there's too much space between your levels, right? The next daily hurdle that we have to get through is here. Then I'm going to go to a 4 hour time frame and I'm going to say, well, if I want to take puts, where do I want to be below? Well, ideally, I want to be below 652.56. But if they can hold 652.56, then what I'm going to think through is that, well, they could use this as support and then take it back up here. Now, if they don't hold this, okay, they retest it and they're going to bring it down to here. Then they'll potentially be bouncing in here. Okay. And then one of two things is going to happen. They're going to get back up here and start bouncing in this zone. Okay. Or they're going to take us down here, retest, and start bouncing in this zone. And that's all the market is doing. Think about it as guardrails. It's just trading between zones. Now, the one thing I'm going to do here is let me fix this. So we got our daily levels. I'm going to go ahead and I'm going to fix the lower ones. And you don't have to be as concerned about these right now, per se, because we kind of blew through them, right? So I'm always charting wherever I'm looking. Okay, I'm going to go ahead and get rid of this one. And now this is what I'm going to be charting and trading for Monday. Let's see if we're in alignment. Pretty damn good. Everything's in alignment, right? I can see I have supply, I have supply, I have supply, I have supply. I still have supply. I don't need to redo these levels up here. They're already from the past, so I can leave them. On occasion, when you drop through them so fast, you'll have to redo them to the upside, right? Like this level here, okay, has moved here. This level here, we fell through it, so I will have to move this level on the way back up. This looks good, this looks good, this looks good. To the bottom, again, same thing, right? If I get below this 4 hour pivot, and even though it's coded on a 2 hour time frame, if we go to the 2 hour, you can see it. But I like 4 hour. Why? 4 hour is stronger than 2 hour. So if I get a good candle close below here, I think we're dropping to here. And then I think we're going further. And you can only chart on regular trading hours. You cannot chart on the extended. There's not enough volume. It's just not how supply and demand works. The only time you chart on extended is for futures data. That is it. London session, Asia session, doesn't matter. They don't trade anywhere near the volume we trade. And when they're trading, they're not trading stocks, they're trading futures, which is why we will chart the futures on the extended. Let's do QQQ. And again, you can see, what am I waking up to? I'm waking up to a freaking mess here, right? So let's turn this off because I don't want it to influence my thought process. Gone, 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 gone. This gets moved now to here. This one goes away. This one goes away. These were all resistance, right? That one can stay. Now, let's go ahead and think about what we got to do here on a 4 hour. On a 4 hour, I'm going to watch this pivot right here. Okay. So I already know that I have my daily high, which is going to be the prior day. This is too close right here. Okay. And then this is perfect, right? I got a lot of room down. For gaps, I only do them on a daily basis. I don't chart gaps on a 4 hour, 3 hour, 2 hour, 1 hour. You'll see that with Alberto in his rising windows and his falling windows. You can see on a 4 hour that, right, we have this gap down here, technically, okay? Which if you want to put them on, you could use those, right? Totally up to you. Comes down to your individual strategy. And then I would think about, the coloring of those. But for me, all of my gaps are only on a daily basis. They have the strongest overall pull. Now, I could see them on the chart. I could see that there's a gap there. And when the software is turned on, right, it's going to tell me that there will actually be a gap that will be open once we exist. But look at where we're at. Again, resistance up above at pretty much all my levels. This one here I can see can go away. But these look good. And I want the top of the overall supply. I don't want the bottom, right? Because if I'm going to take a reject, I want to take it at the very top. Yeah, if you want to remove everything, right click and just click remove 22 drawings. And it'll get rid of everything and your indicators. But again, this is my strategy. So now look, QQQ is done for Monday. I mean, there's nothing more for me to do. One of two things is going to happen. We're going to open up here, or we're going to open in here, or we're going to open in here. And then I'm going to just trade the levels as they exist. Okay. Now, mind you, when you are trading this, and let's say we open for some reason in this area right here. Well, this is not technically overhead resistance. It's not. This was support, right? So my question will become is, can they get above this and maintain it in order to go back up here? Or are they just going to struggle within a lower time frame zone on the bottom? Okay. So QQQ is now done. I am also going to chart, and again, I chart Apple, Google, Meta, Microsoft, Nvidia every single day. Why? Because if I'm going to trade the Qs, and you don't have to do it, totally up to, whatever your strategy is, but with Confluence trading, if you're not paying attention to Apple and Nvidia, you're probably going to get screwed at some point in the trade where you're like, well, I don't understand why it didn't run to my level. Well, it didn't go to your level because the market cap weighting of Microsoft, Apple, and Google is like 40% at QQQ. So you could be agnostic. You could not pay attention to it. Totally up to you and your strategy, right? However, you like to think about processing data. For some people, they're like, it's just too much. All right, well, then at least watch the VIX because the VIX is telling you what they're doing with SPX premiums. But what I don't want you to do, right, is to chart in a vacuum. Now, what do you do when you have really long wick candles like this? Would I use the bottom of this? No, not to go short. What I would be using is this candle right here. Why? Because you can really see the consolidation. And this most likely was a news candle, okay, where you'll see it pulls down, but then it automatically comes right back into the channel. And when you go to a 5 minute or a 15 minute, you guys can really see where these are at. Now, if you want to be ultra conservative, and again, depending upon your strategy, then go ahead and throw a level right here, right? I mean, because technically, that's where the supply and demand is actually picking it up. What I don't care for myself is that price never stayed down here for very long. Okay. But it is a potential where they could reject harder. Now, is it going to kill you to have two lines on the chart? No. And is $2 a lot on Apple? No, not really. But you can also see behind the scenes where the supply box is overlapping the demand box. Now, these are also stocks that I don't particularly like to trade. When buyers and sellers are on top of one another, this is where you're getting that tug of war. Calls, puts, puts, calls. What do I do? I would say I'm not trading Apple unless Apple gets above my 1 day supply to go up and fill this gap. Or I'm not going to trade Apple, okay, unless we get below my demand box, okay, we push up and we go lower to my next price level. But I am not going to try to trade Apple within all of this monkey business called slop. This is where you just constantly keep getting screwed out of your trades. Okay, so now Apple is done. I'm going to do Microsoft again, and I'll show you why in a moment. So I'm not going to use the software. I just want to look at it and do exactly what I told you I was going to do before. Okay, this line I'm going to get rid of. And again, I could put it here, but we are not even $1 apart, so I don't even care about that line. I'm not going to put a line at the daily high because I have the prior day high. And what do I want to watch for on this one? Well, I'll consider puts if we get below this 4 hour low of 370.51. If not, right, calls look pretty good to the upside. Now, again, I have to be cognizant that I have another wick right here where we could push it up to and they could reject it. So, whether you want to use this candle, which would make the most amount of sense, and then if the market has strength, right, we really like calls above this level to go all the way the heck up here. Let's just confirm. Am I close with my strategy? Yeah, right? Should not be looking for puts until we get all the way up here. I don't want puts here either. I want calls. And you can see this isn't even a supply, but what it is it's a pivot, right? Where they pushed the market down, they pushed it up, they drug it down again. I will watch for my pivots as to where do I potentially want to have an exit strategy because it's going to be too euphoric to think that, well, oh yeah, okay, we're above here now. Automatically, we're going straight up here. You probably are over time, but you also have to consider that this was a pivot where the market started pushing lower. So that could be a take profit of a good portion of your underlying position size and then let the runner go. Or wait and see how it responds here. But you have to also understand that this is where the market pushed lower. Now, if I were to look left, and depending upon how far left I go, do I have anything similar, right? And again, this is where you can kind of cut across candles if you want to, but look at where this candle low was, just barely right above these candle highs. But I would rather trade today's news and liquidity than trade the news and liquidity from April 22nd of last year, right? I don't know what was going on here last year. I mean, why did the market respond higher? Was it ChatGPT launched? Was it that, we removed tariffs? I mean, there was probably a catalyst here that caused, Microsoft to jump as high as it did. Actually, it was earnings, right? So do you think that demand here with earnings is going to be the same as demand here with no earnings? The answer is no, right? Okay. So Microsoft, again, you can decide that, well, I really just want to say, can I just see what it's doing for 1 hour and 4 hour? Of course you can. Let's just see where our 1 hour and 4 hour line up. And do they pretty much touch the majority of the points that I want? But I don't want to be taking puts in here. I mean, it just makes no sense, right? Because look, these are your weekly, hourly, 1 day, 1 hour, 4 hour, 4 hour. Okay. And every green box represents a different time standard. So again, this is how I would trade it. But do I want to take puts going into where there's a lot of buyers? No. So this would be a stock that I would just say if the market is weak, I'm not taking puts in Microsoft. Okay. I'll go find another stock where if the market's weak, that we could push lower in. We did Apple, Microsoft. Let's do NVIDIA. I'm not even going to have to do a charting session tomorrow. Okay, so this line goes away. This 4 hour low now comes here. This stays in place. Okay. And then again, if we're going to look, now this might be a condition where you might say, I'm not going to take this 4 hour low, but I'm instead going to let it cut across the candle to take this for a put position. Why? Because this is too narrow right here. And I could see they bought it up here, they bought it up here, drag it left, they bought it up here, they bought it up here, they bought it up here. Okay, so this is kind of zooming out and having a better contextual view as to how would I want to trade NVIDIA. Now let's do the exact same thing. I'm going to go ahead. We got all of our zones. I'm going to turn on the others so you could see that this would most likely be a stock that I would not want to trade unless you can get a pullback somewhere down here, which is also about 50% of this bullish engulfing candle to go long, right? This would be a 50% retracement. Let's go ahead and do that real quick. Pivot high, pivot low of the candle. Okay, no, wrong way, Bill. Let's do this. Okay, so where would I look for a bounce? Well, again, I want it to retrace. I want it to come into demand. Where's a good place for it to come into? Well, my price level would be ideal, but if it slips a little below it, right here at this 50 fib for this huge, massive 4 hour candle, right? This is where I would be literally willing to take calls to go back higher. So this is how I would chart NVIDIA for Monday morning. Done. Let's do Google. This didn't do anything, right? I mean, so on a 4 hour level, this is going to be kind of my low. I can get rid of this line because I have a gap fill down below that never filled, and Google's done for Monday. There's nothing more I need to do on this one, right? Everything's sitting below the line puts, hold the line, go up for calls. That's it. And you can see where we're at a huge indecision, right? You technically, for calls, want to get above this candle high where supply is forming. Puts, you want to get below the zone, right? Do not trade in here. This is where you're just going to get screwed. So, well, that was easy. Okay. So now I just know, yeah, I'm not trading Google. There's nothing there for me. Let's look at Meta. Meta's had a ton of movement. We still have a gap fill down below on the daily. Okay, so what do I want to watch here? Now, this one's going to probably be a little bit more sloppy because it's been back and forth. And that's one thing that you'll note when you're looking at charts, right? Is that we have this wick high, and then I'm going to trade this 4 hour wick low. I'm going to get rid of this one. I'm going to trade the gap fill below, and I'm now done. Okay. I'm not going to try to trade this little tiny candle, which is nothing more than consolidation. If you want to play the puts below 569 down to 559, but calls above 578. Let's just see if we got any kind of confirmation with what I'm thinking. Wow, what do you know? Makes all the sense in the world. Okay. Now, what you have to be cognizant of is that every once in a while, if you go to a 1 hour time frame, your ideal position is not going to be to get above the 4 hour But if you wanted to be safe than sorry, safer than more sorry, right? This is really where your overall resistance is going to be. Again, depends on how granular you want to get within the charts. Let's do Amazon. I'm going to turn this off. Lots of movement here. And again, it becomes a little more challenging when you have a lot of wicks, but these were my levels from last week. I mean, I didn't even move anything, right? And you can see exactly kind of what the market is thinking. So let's get off a 1 hour. Let's go to a 4 hour. You'll see the exact same thing here. That this 4 hour low ended up being this 4 hour candle high. This wick, move it here to here if you want. This is too close. This I'm going to drag lower here. This is pretty darn close, but we'll put that as a price target up above. You can use that as a price target below. Again, if you want to look at it, you're in this zone forever, right? If you want to get out of the zone, right? I like call or puts below 208. Again, you could take calls here. This doesn't concern me. 45 and 30-minute zones are irrelevant. They're not strong enough to reject the market. Okay. So think daily, 4 hour, 1 hour. Those are really what I chart. This is a 45-minute candle. That doesn't scare me, right? What I want to know is can they get and hold above the 4 hour high? Because it was also this 4 hour candle low. So that is now done. Let me see what other one I need to do so that we can all be on the same page when I show you how I look at this. We did Google. The last one I'm going to do is Tesla, and then I'll do the futures. So I've been trading Tesla a lot lately. Let me turn this off. Messy, messy, messy. Let's get rid of all these fibs. Let's get rid of this price level. This price level can go away. This can stay. Let's go to a daily time frame. This one can now go. Reason being is you'll see that we have a gap, right? Here to here on a daily time frame. Yellow, yellow. Oh, come on. Yellow with purple fill. That's kind of fun. Yellow. Okay. We'll save that. We're gonna, on a daily, this is the candle low. The bottom of the gap is the candle high. The bottom of this low is the top of the gap. I'm not gonna put a line here because I'm only not even $1 away with this candle wick high here. I'm gonna look at a 4 hour time frame. This up above doesn't matter, right? Because this was a support line. It's not support anymore. We already broke all the way through it. So where do I want to think if I'm going to go in calls? Well, guess what, guys? I need to get above 365. If I could get above that, this is going to be a high watch for me on Monday. Okay. Why? Because I got a lot of price expansion and I think I have a lot of opportunity. Below 359, we can ride this to 352 and I have a gap fill below. We get back above the 4 hour candle high with some strength. I have a gap fill up above. Let's just check it. Does it look good? Yeah, looks pretty good to me. See if there would be anything I would adjust. Not really. Again, this is the only difference that you're going to see with the supply and demand, right? On the lower time frames, 45 minutes. Personally, I don't care about that. I'd rather stick with the 4 hour. But if you want to, again, I don't even have a 45-minute on my chart. Let me add that for you. It's because I don't use it. Um, but if you want to go to a 45-minute and say, well, where is the 45-minute candle high? That's where it's creating this overall supply cluster. Okay, right there. But for me, that's a little on the high end. I'd rather just see us cover above the 4 hour, which was also this candle closed, this candle opened, this candle opened, this candle closed. Okay, so on Tesla, there's demand below. So if price dips, would I look for puts? Nah, not necessarily. No, it's only 30-minute demand zone. Not really. I mean, you can. Um, I mean, once I get below, it depends on where we're going to open. Right now, well, market's closed, so we'll have to see where we open. But if I can get back above this 4 hour cluster, right, I want to see us go higher to the upside. I need to get technically below this to go puts. I could take calls here, but again, I'm going to watch market breadth more so than anything, just not a level by itself, right? Because this level could be like, bloop, bye, we're going down to this level. And just because you get to a level, you don't say, oh, well, we're at a level, let's take calls. No, because if the level breaks, well, then I want to take puts. Now, when I'm at a level, this is the other thing that most people do wrong, is they're like, okay, well, the candle closed below the level. Okay, I got my red candle. Bill, you said let a 5 minute candle close below the level. Okay, is that really below the level or is this below the level on a 5 minute candle? This is what I want to trade. I don't want to be taking puts because it just did this, right? That's nothing. That could be a 1 minute candle, and then you get liquidated back to the upside. So when I'm watching a candle close, I want to see it have some overall depth. And then ideally, before I take the put trade, I'd like to see it retrace on average about 50% of this drop. Okay. So get that the right way. So even you could throw a fib on this 5 minute candle and say, if I get a push higher, where do I want it to go? Well, I want it to come back up here. Huh, guess what? The 50 fib is right at my price level that it broke. That's going to give me a very good confidence that I can let the retest come back up. Not only do I have a 50 fib, but I got a price level to go lower, taking that trade every freaking time, you guys. Every single time. Okay. But when you have a candle that just does this, right? Now look at what you have to do from a fib perspective. You got to let it come all the way back up here to retest. And then what if it does use this as support and then takes you higher? So that's why when you're seeing this 5 minute candle close and you're like, okay, Bill, well, I did what you told me, right? I saw it retest here and it didn't go lower. It retested, it did this, and then it went here. Well, why is that? Well, that's called a liquidity sweep, and you just got swept. Okay. So watch the strength of the candle. Also, when you have a candle that is going to close below a level, you do not want to see a very long wick on this candle. Okay. You want to see it be a full body candle. You do not want a wick that is going to come all the way down. Okay. You don't want to see it do this. Why won't this draw? It doesn't want to draw for me. That's all right. You don't want to see a huge tail on this because that's telling you that they're actually buying it back up. Okay. So this is how I would think about trading Tesla. And this is what I love to trade, right? Look at all this black space. This is what we want to do. Okay. If you got a really long buying wick, that's telling you like this. I would never short this candle. Okay. Even if it closed below my level, I would never short this candle. Why? Half of it is buyers. Now, I would short this candle, right? This is a nice one, right? Nice red engulfing candle, push back up about halfway, take the put, ride it back down. But do not take puts here. Do not try to catch puts here. Let it come back higher and then let it drop lower to the downside. Let's see if I could even find one for you with my level where we broke a level. This stock's probably too volatile. This is going to be a harder one to find. Let me see if I can find one on QQQ. Here's a good example with a call trade, though. Same thing. You got a nice push up, you miss this entire run, and you're thinking about, well, where do I want to go ahead and get into the trade? Okay. So where might it bounce, where it'll hold? And this is where again you can use a fib to say this is where I want to take it to actually continue it and go higher. Now you'll also note here on this, right? Because it's later in the day, all you got stuck in was a bunch of consolidation. You really never got the move that you were ideally looking for. So, questions? What can I answer? Alberto, I know you've been answering a lot of the questions in the chat, so thank you. What did I miss? Or what would you like to add?
Yeah, I wouldn't miss anything. I think one of the biggest things, and I'm seeing this as I'm responding to everybody's responses, and so it's twofold, right? Um, One of them is reactions. Okay, so as you're thinking about like what Bill's talking about when we're talking about levels, everything has to do with reaction, right? What are the institutions moving around? What's the market maker doing? What is the reaction at these areas? The other part that you want to, we will always want to understand is just because you have a support area doesn't automatically mean you're taking a call position off of it. Everything comes down to context. So we could be looking at a support area to identify, is this an entry or is it an exit area for me? In other words, if we are coming on a week, where the market's really falling and it's approaching a support area, that's not necessarily going to be an entry area unless you can enter with an actual bounce and that reaction is really violent to the upside. Then that would make sense to let it come back and then go back up. Otherwise, that zone or that support level would notify you it's potentially time to exit your put position because of the fact that you're approaching an area of interest where there might be some reaction. So it's not just an one or the other type of thing. It's not just, oh, I have a support zone, so all I should be doing here is just looking for calls, and that's how people get chopped up in the liquidity. And so context matters in what you're charting and how you're charting it.
Yeah, exactly. And I know you guys get mixed up with fibs and everything else. Well, when would I use a fib? You need an extreme move on a fib for it to be most effective. So if I'm going to say I'm going to take a pivot high to a pivot low, I am looking for where the market is going to come back up to right here and reject and go lower. Now, if it doesn't reject and go lower and it holds this golden zone, this is oftentimes where I will then take a call trade knowing that it is going back to this liquidity pivot high, right? You can see what the market did. It has a nice drawdown, okay? You're looking for it to come to the golden zone, which is on this candle, and you're thinking, okay, I'm taking my put trade. And then you get this drop, but then you see this next candle holding the 50 fib. That means they are not going to drop the market. So that's where I would exit the trade and I would say I should be in calls to go back to the liquidity high. Remember what I told you earlier. The market is doing nothing other than trading from this level to this level to this level, back to this level, back to this level. It's constantly trading within channels, right? And you're best to do a fib when you have an exaggerated move and you have price levels that you're in between trying to figure out, well, directionally, where are we going next? So let's say this was also strength. And I could say, well, I'm going to take a fib from a pivot high to a pivot low to say, is Apple going to reject? Okay, and
Sure.
head lower. So we
Thank you
have
for joining me.
well, 5, 10, 15, 20, 25, 30,
Oh,
35,
you
40,
too.
45 minutes. We push up here. I take the put trade. I can ride it all the way down to here. But as soon as they recover the golden zone, it is telling you the market doesn't want to go lower. And then just look at the market structure. Look at what it's doing. It's making higher lows. What's it also doing? It's now making higher highs, right? So now you're trading in this channel back and forth. Questions? How to use the squeeze tool. So this is something new that I've been using the TTM squeeze from John Carter for about 5 years now. You're now seeing it on my charts here. I'm testing it. It's his Squeeze Pro Ultra. It's brand new, and it was about 2 grand. So I paid the $2,000 for it, and I'm testing it out to see how it works. It's ideal for swing trades on a daily time frame. So it was built for higher time frames for stocks to look to swing. So I'm testing it on the lower time frames, being 5 minute on the futures data, as well as on the 1 minute on individual stocks for some of my plays. Yep. Yeah. Yeah, yeah, it's not. I don't know. I mean, I've been using it for so long. So like the market's telling you here on Apple on a 5 minute time frame, it's in an ideal squeeze, right? So if it's squeezing, you don't want to be taking puts. You ought to be thinking calls, right? Same thing here, right? It's squeezing, but again, you got to read it with the market breadth. And then what does it do? It pulls back, and this is where you have to learn how to use the EMAs with it. And why are my EMAs not on here? That's odd. Let me fix that because this is what it really looks like. It's color coded with early entry, early exit, and here's the EMAs. So you use it in conjunction with the overall trend of the market and the EMAs. Okay. So I thought of one other thing that I wanted to cover with you guys. Is that why did I chart Google, Apple, Meta, Microsoft, and everything? Because when I'm charting all of them, I can literally be trading, and I have a screen to my left that is telling me if Apple is breaking a level, and Nvidia is breaking a level, and Meta is breaking a level, and Amazon is breaking this level, and someone's thinking, oh, I think we should go in QQQ puts. Good luck. I mean, so you can chart QQQ all you want, right? You can use price action with QQQ all you want, but I sure as hell am not going to be taking the QQQ puts when this guy, and this guy are all breaking above their 4 hour price levels, right? It just doesn't make sense. And then again, I could also see are all the individual names on 5 minutes squeezing, right? So here, Apple squeezing,
Hey, I
Nvidia
love you, man.
squeezing, you know, they're squeezing to the upside. So the likelihood is you're going to go up and not down. Same thing here. Here's a good example at the market close yesterday, right? I'm going to take calls. I'm going to take calls. I'm going to take calls. Why? Look at this. Over and over and over and over and over again, could not get above the level. On the close, I did take some puts, and then the market drew down, and it was literally I took them right at the bell. And again, on SPY and QQQ, you can hold them 15 minutes after, and it pulled all the way back down to 655.36. Okay, this pivot low before it actually went higher. So, but they move super fast and the market's illiquid. But what I was doing is, again, I'm trying to back test the software. And then what's happening at the same time? My price level on the volatility, right? The VIX. It's going to bounce here. I don't think it's going to break this level. This has to break this level in order for this to go above its level. Okay. So daily gap fills are nothing more than a magnet, right? We can find them probably on most charts here. I'll show you. Watch this. Let's see what they're doing here. So they're unfilled orders, right? And it's a mismatch between liquidity, buyers and sellers. So now uh, we have on Nike a massive gap to the upside. At some point in time, this will fill. So as it comes back up here, it will literally touch this box and either push lower, get into the box, use the bottom of it as support, and push to the top of the box, right? It's just nothing more than price levels at a very high area where all these orders of people who wanted to sell could not get out, right? And so now they are stuck with their sell order all the way up here. Now you could see, I mean, this is another great example, right? All these levels up here, they're fine. They can sit there. We're not going to use them for a long period of time because the stock's trading all the way down here. So, what do I want to chart on Nike? And you can see, again, if I expand this, you can see where it's created a smaller gap, right? Again, on the daily basis. So now we have a gap that exists here. So the software also helps so you don't miss things, right? Where do I have overall demand? Well, I know I have it here. Okay, it's on a low level time frame. Otherwise, I got to go back 20 years I mean, to find when the stock was that low. See, the chart doesn't even go back that far. I mean, and these are like stocks that you don't touch, in my opinion. You don't just say, oh, well, I'm just going to buy and hold and it's eventually going to go higher. It can go to $20, right? Look at Under Armour. Look at Lululemon. Look at Restoration Hardware. I think we're in a different world of, that people are not going to buy what's not working. But this is a daily gap fill, right? You got to have your daily gap fills. Nvidia had one, but it closed it. Let's see if I have another one. Like these levels are going to end up going away. Um, yeah, I don't. Little tiny. No, I don't have a daily gap fill on this anywhere. Maybe somewhere. Oh, down below. Yeah, it's way down here at 148. Although I'm not expecting, Nvidia to get down to, 148. So, other questions? Yep, I chart VIX the exact same way. There's nothing different. So here's my chart for VIX. Now here's what we're going to have for Monday. I'm going to get rid of this. This I got to do on Monday morning because VIX doesn't close. But as of right now, here's a price level. Here's a price level. This is no longer a price level. We'll move it here. And that's about it. VIX doesn't close, so that's that. Same thing with ES and NQ. ES and NQ, okay, are on full trading hours, so they are on extended. So it's the exact same thing. Get rid of this, turn this off. Well, no, don't turn that on. I'm going to really confuse you guys if I start showing you all that stuff. Um, get rid of supply and demand. Daily, again, I'm going to have to redo this come Monday morning. But if it was Monday morning, this is what my chart would look like right now on ES. Right here, make this blue. And this is what I would trade, right? We got this huge wick, but I would want to be cognizant of this level here. We already blew through these other ones. So this is really just kind of what I would be trading on Monday. This one on a 4 hour, we're going to come to this candle low here. And that's it. Let's see. Nope, I don't want that. I want this. So we're at the bottom of the zone here, right? It created a smaller zone on a 1 hour, but I'd rather trade a 4 hour. So that's just again my personal preference is 4 hour is stronger than a 1 hour. But again, if you wanted to say let's be ultra conservative and let's go to the bottom of the 1 hour zone before I take my puts, look at how much room you can drop, right? I think we could potentially stop here because they did stop the market here to move it higher. But if not, we will push lower. To the upside, right? You could say right here, but I don't want a level here, a level here, a level here, and a level here. Here's where your premium trading space is going to be in ES. Let's do NQ. I wish we could just type symbols and not do this. Let's go ahead and get rid of my fib where I was watching the bounce. We'll do a daily. Let me turn this off so we don't have a mess. Pretty much the same thing, right? It looks the exact same as uh, ES. We'll use this here, 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 here. All my price levels line up. 1 hour. Yep, I'm not missing anything, right? We're consolidating here. I got to get out of this consolidation. Again, if you want to use the 1 hour, you can use the 1 hour, right? And it's going to be this candle pivot low. And go ahead and turn it on. So this wick is not a pivot low. You got to look at the candle bodies, candle body, candle body. The candle wick low of the lowest candle is what you use for a fib as well as support and resistance, right? This I can drag and say, okay, if we fall below 25,859, we're going to come here. We fall below this, we're going to come to 23 and change. But again, I got to wait for Asia session, London session, and everything else before I chart because futures might open up down here or they might open up down here. I don't know where they're going to open, so you can't chart the futures other than the day of. Okay, I know that was a lot. It was an entire hour of charting. Any other questions before I let you guys go enjoy your Friday? Yep, TradingView is having an Easter sale. So if you want to renew or upgrade, now's the time to do it. That's exactly right.
Hey
Yep.
Bill, the just if you could you went pretty quickly over the gap. So you're saying when there's a top of a gap, that means the sellers did their orders didn't get filled and then the price just drops? Is like how does that work, the mechanics of that?
Yeah, so right here was everybody who wanted to have a sell order in place to get out of the stock, right?
Yeah.
And then it gaps down. So the reason that the market will use this is it knows that there are sell orders here. There are no sell orders down here. Everybody who wanted to sell up here.
And
Nobody now wants to sell down here. So this technically is where you would have more buyers, right? And so what the market will do is it will come through this gap and then 9 out of 10 times, right? It'll come up in here. It'll go all the way up to where all these sell orders were sitting. And then that's why it pushes all the way back down.
how did the orders get filled way below when all the sellers said no, I don't want to
They're
sell?
not. If you were a hedge fund manager with $10 million in Nike, your
Yeah.
sell order is up here. You're not selling it down here.
So how did the price go so low? Like if I've got $10 million of stock of Nike at 62 and I say I'm not selling less than 62, how did it get all the way to 47? I don't get that.
Everybody decides to hold except for Dave. Dave says,
Oh,
I'm
I
willing
see.
to sell my share for $44. Bill comes in and says, I'll take your share for $44.
Oh, so it's other people other than me.
Yeah, I mean, right? I mean,
Yeah,
and that's why we don't chase pre-market running up. I mean, look at all the idiot retail traders that are buying everything pre-market. The market opens, and then what does it do? It dumps. You got to remember, price moves because of buyers and sellers. What you don't know is the volume of those buyers and sellers, right?
yeah. So there's all these guys up holding at 52 or whatever, but there's also a lot of guys that sold at 47, you're saying really.
Yeah, all the retail traders, right? Everybody who was
Yeah,
playing earnings that, oh my gosh, it's going back to 60, 70, 80, and then earnings come out, and the little guy's like, oh my God, I just bet the house on that. Now I gotta sell. I'm forced liquidated because I can't take any more pain, right?
I see. So it's a combination of some people hold that can afford to hold and other people sell because they're freaking out.
Exactly. Yeah.
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 Okay. Thank you. I just couldn't get my head around that.
Yeah, it's exactly what happens, right? Greed and fear. It's like I can't take any more downside paid. I mean, Warren Buffett says it the best. If you can't hold a 50% drawdown in a stock, don't buy it,
Yeah, right. Okay.
right? Because wealth is the transfer from the impatient to the patient. It's
Yeah,
those
that
who are
makes sense.
impatient sell, those are who patient hold and buy.
All right. No, thanks for the explanation. This is a great webinar. Thank you.
Yeah, you're very welcome. You're welcome. Any other questions? Yeah, you can talk, Matt. Unmute your mic. You're good. Okay, I'll post a recording if you want to go back and watch it. And with that, have a phenomenal Easter weekend. And I will see you all Monday morning for live trading. And Alberto, as always, I am so appreciative of you, mentorship, friendship, and everything that you provide to everybody in the community.
Thanks, you guys. Thanks, Bill.
All right, guys. Have a great weekend, and we'll see y'all next week for some more bangers and
See you
education.
later.
Later.
Bye bye.
Thanks, Bill. You too.